Hello, so I thought I'd talk casual income today. The reason why I'm choosing this topic is because I've had a couple of casual employees come to me recently for home loans. Now, there are a few points to note when you are casually employed, and that is number one, most lenders will want you to be in your position for at least 12 months. You can get lenders that will accept your casual employment for 1 month at the bare minimum. But the thing is, when you go to these types of lenders, they're pretty much tier 2 lenders. And what that means is that your interest rates will be higher because they've given you that option to be able to buy a house with such little amount of time in your casual employment. So it's seen as slightly higher risk. So when you come to have a loan application done and you're a casual employee, some points of interest are: number one, you want to be in your job for at least a minimum of 6 months realistically if you want to get a major lender, 12 months if you want a major lender as well. So you've got to consider the fact that if you're going to have less than 6 months in a casual employment contract, the lender's going to see you as more risky, which means you're going to get a higher interest rate. Doesn't mean that it's not doable. It can be done, and I have done a few of those home loans. The reason why some policies will change depending on the lender is some of them will take it on a case-by-case scenario, and they will accept you even though you're slightly more risky. Now, why would casual employment be seen as risky? Because ultimately your employee can fire you at any given point. The reason why they generally give you casual employment is because it's a burn and churn kind of industry, i.e. McDonald's, so generally in the food industry. Or it could be that, like in the mining sector, so something that's happened recently is a lot of the FIFO jobs are now turning to casual employment. Now this is because of the uncertainty in the sector. So things you need to note: casual employment, if you want to get a home loan, make sure that you've got a bare minimum of at least 1 month's permanent casual, but be prepared to take a higher interest rate. If you want a lower interest rate and you've had longevity in that role, so you've been doing the same similar kind of job over a 12-month period, but you've just taken a new casual role somewhere else, you can go down that route and then you will get a lower interest rate. So there are varying factors. It depends on your case scenario, as it always does. Everybody's situation is unique, and that's why you must speak with your broker. But I just thought I'd touch on casual employment just so that you've got a broader understanding of why the lenders do what they do. Cheers.